Well, joining us now is Jefferies equity analyst Sheila Kahyaoglu. Sheila, it's great to have you on.
Thanks, Morgan.
Aerospace and defense was one of the worst performing industry groups in the S&P 500 this week. And it does seem like that was in large part due to this focus on cost cutting and what Elon Musk and Vivek Ramaswamy are going to mean for government budgets. Is it overdone here, or are there reasons for investors to be concerned?
Yeah, sure. I think in addition to the primes, the services names like Booz and Leidos and SAIC got hit significantly as well. So we did downgrade Booz pre-election, sort of forewarning this, and then AVAV earlier this week. In terms of what Doge could actually do, I think that'll be the hardest part. These names, let's not forget, earn 10% operating margins. And in fact, they've had massive losses, Boeing included, Lockheed, Raytheon, on fixed price programs, Northrop as well. So I don't think this is the best place to go after government efficiency. If you do it, you'll go after heavier equipment, not so much the services names. But interestingly enough, the shorter cycle services names got hit a lot harder, almost double the primes this week.
Hegseth, Gabbard, Ratcliffe, Waltz, Rubio reports that you could see a revamping of the senior-most generals in the Pentagon. It does seem like this is an incoming administration that is poised to really shake up DOD. So I want to get your thoughts on some of these appointments and the read-throughs there, too.
I think it's hard to tell. I think one thing Trump has talked about and what we've seen in the past few days is, potential pull out of the European region, and that's maybe impacting some of these names. The way we're thinking about defense budgets is 3% growth, but supplementals add another 3%. So if you have a pullout of supplemental funding, obviously that would hurt the higher margin growth business. So that would impact the primes the most. But Trump hasn't said too much about defense policy just yet, outside of cleaning up inefficiencies.
Sheila, lawmakers enjoy cutting stuff the other party likes, but it's not clear to me that Doge is going to take that kind of thing into consideration, and that Congress, even a Republican-controlled Congress, is going to be happy with what Elon and Vivek come up with. What do you think?
I think it's hard to tell. We don't really know what Doge will be able to do. I think that's the hardest part of our analysis. So what we're looking at is just broad buckets, and that's really not fair to these names, but that's what we have to do. So we're looking at who has DOD exposure, say, versus Fed Civ exposure, and potentially running analysis on that civil exposure. That's about 25 to 40% of sales for the Fed IT names. And I think that's why you saw those names get hit harder. So why Fed Civ? Because Republicans potentially don't fund civil budgets, but are they really going to cut back healthcare for veterans? I don't think so. That's not necessarily making America great again. But what they could do is DOD exposure requires classified employees. And so potentially on the Fed Civ side, you could move that to lower cost locations and move that to commercial consulting firms so they could see some margin impact there. So I think it's...
Who do you think is most immune?
Most immune, I think Parsons. It's been our top pick in the IT services space. They have 50% of sales to federal government, 50% critical infrastructure. So on the critical infrastructure side, they're immune. And I think within that, they have a PFAS business. A good example of that is who Trump put into the EPA position, who's been a big PFAS remediation supporter. So that's one of our top picks in the defense space, as well as LHX. In general, we've been pushing the commercial aerospace names, particularly the aftermarket, which also has not had a great week this week. So across the board, you've seen aerospace and defense really get hit massively.